Top 6 Crypto Passive Income Generators for 2022. The world has been talking a lot about passive income lately. It is literally the talk of the town. Everyone wants to have a stream of side earnings in which they do not have to put constant attention and effort. This is the era of digital money and cryptocurrency. So, what if we tell you about the ways to invest cryptocurrency to earn a lifetime of passive income? In this video, we are going to tell you about the top 6 crypto passive income generators for 2022. Before we move forward, make sure to hit the like and subscribe buttons. And don't forget to share the video with your friends as well. Let's dive in. Buying and holding crypto, often known as HODLing in the market, is a common technique for people to try to get a return on crypto with little to no engagement. This indicates that an investor is willing to buy a digital asset with the expectation that its value will grow dramatically in the future. These investors are willing to go the extra mile, since this long-term approach may require them to maintain their assets for up to 5 years. An investor does not need to be engaged in the crypto market for the term of this investment. All he needs to do is have a wallet where he can store the digital assets he bought. Here are the 6 ways we talked about. Proof of stake. Proof of stake is a blockchain consensus technique that allows distributed network participants to agree on new data being added to the blockchain. Blockchains provide open, decentralized networks in which people participate in governance and transaction validation processes. This is significant because a community-centered strategy minimizes the need for central authorities such as banks. The methods for selecting validators differ from blockchain to blockchain. It is required for the users of some blockchain networks to make a financial deposit or commitment to it. Validators are chosen from a number of users who have staked a certain amount of the blockchain's native digital asset. The validators receive interest on their staked cash in exchange for contributing to the network's authenticity. This is what we call proof of stake. It allows long-term investors to produce passive income. Although this might be technical, you could use the proof of stake blockchains, which allow you to delegate your stakes to other users who are willing to take on the technical aspects of staking. Validators receive a somewhat higher payout than delegators. Ethereum 2.0, Cardano, Polkadot, etc. are some proof of stake blockchains that you can use. Interest-bearing digital asset accounts. Crypto account holders can earn fixed interest on their idle digital assets by using interest-bearing crypto accounts. Consider it like placing money in a bank account that pays interest. The main distinction is that this service exclusively accepts cryptocurrency as a form of payment. Rather than keeping your digital assets in wallets, you can deposit them in these accounts and earn daily, weekly, monthly, or yearly interest based on predetermined interest rates. Nixo, Swissborg, Celsius Network are some crypto service providers you may use for this purpose. Lending. Lending has grown in popularity in both the centralized and decentralized portions of the crypto economy. Being an investor, borrowers can have your digital assets in exchange for the opportunity to earn. There are 4 types of lending involved. Peer-to-peer lending. In peer-to-peer lending, users can create their own terms, determine how much they want to lend, and how much interest they want to earn on their loans. When it comes to crypto lending, such lending systems give customers a certain amount of power. Centralized lending, the user relies completely on third-party financing infrastructure. Interest rates and lockup periods are both fixed in this case. DeFi lending users can use this method to perform lending services directly on the blockchain. DeFi lending does not require any intermediaries, unlike P2P and centralized lending schemes. Lenders and borrowers deal through smart contracts, which are programmable and self-executing that adjust interest rates autonomously on a regular basis. Margin lending. In margin lending, users lend crypto assets to traders who want to trade with borrowed cash. These traders use borrowed cash to increase their trading position and then repay the loans with interest. Are you enjoying the video so far? Which point has grabbed your attention the most? Share with us in the comments. And keep watching to find the last step with some highly beneficial information to get started with creating passive income. Cloud mining. Some blockchains, like Bitcoin, have a more computer-intensive method. in which people compete against one another to solve exceedingly complicated mathematical problems in order to verify their claim's eligibility to become miners. This is known as mining. Miners must spend a lot of money on expensive computers and pay astronomical electricity costs because of the competition. This process could be really intense, so another approach called cloud mining is usually approached by miners. You may use this to pay third companies to handle the technical aspects of crypto mining for you. Basically, you pay a fee to a platform that provides such services to rent or buy mining devices from their mining facility. Following this initial payment, you may be required to pay a daily maintenance charge to the cloud mining service provider in order for them to assist you in managing your mining rigs. Dividend earning tokens. Some tokens provide holders with a portion of the revenue generated by the company that created them. You are instantly entitled to get a specific amount of the company's revenue if you only hold the token. The percentage of revenue you earn is determined on the quantity of tokens you hold. Yield farming. Yield farming is another way to make passive crypto income that is decentralized or DeFi. This is enabled by decentralized exchanges, where users are dependent on a mix of smart contracts and investors for the liquidity required to complete deals. Users do not compete with brokers or other traders on this platform. Instead, they trade against money put in special smart contracts known as liquidity pools by investors known as liquidity providers. In turn, liquidity providers earn a proportionate share of the pool's trading fees. To begin generating passive income using this method, you must first become a liquidity provider on a DeFi exchange such as Uniswap or PancakeSwap. You must deposit a certain ratio of 2 or more digital assets into a liquidity pool to begin earning these fees. When you deposit liquidity, the decentralized exchange will provide you LP tokens, which represent your portion of the total cash in the liquidity pool. You may then use these LP tokens to generate further income by staking them on compatible decentralized lending sites. With this method, you may earn 2 different interest rates on a single deposit. And that's a wrap. Thank you for staying with us till the end. We hope you found the video informative and interesting and learned some valuable tips and tricks. Before you go, make sure to support us by smashing all the icons. Stay tuned for more amazing content. Until then, take care.